Well, we're back with you on the Market Day Report. I'm Marlon Bowling with you. It's a Monday, and we're getting braced for the USDA reports that will be coming out tomorrow. In the meantime, I do want to take a look at our crude oil market and our U.S. dollar because we have been watching those quite a bit here lately. They have been gyrating around. And right now on the crude oil market overnight, we had the market actually trading weaker, and then it firmed up, and now we're back weaker again. We have the August crude oil on West Texas crude now down 17 cents at 45.24 per barrel after posting a high of 45.77. Now it did get as low as 44.53 at one point. So we have had a trading range here of about $1.20 so far in the crude oil. On the U.S. dollar, on the September futures, we are now 220 points higher as it continues to firm up a little bit. We're now at 96.620. Let's go to the grain trade, see what's going on with the corn and soybeans and wheat right now. On the corn market so far this morning, on our live quotes, we have September corn down 3 1/4 at 351 3/4 after trading several cents higher overnight. December is down 3 1/4 at 359 1/4. On the soybean trade, we had double-digit gains overnight, and that has softened up a little bit, although it is firming up in the last half hour once again. August soybeans up 9 1/4 at 1092 1/2, got as high as 1101 at one point. November is now 9 higher at 1066 3/4. Let's go to the trading floor in Chicago. OliverSloup is standing by. He's with iiTrader. And Oliver, thanks for joining us on a Monday. A little bit of choppiness in the grain trade. Is this just because of the reports coming out tomorrow? A lot of positioning or what?
Yeah, pretty choppy trade. We saw a bid come into the market on Friday to round out last week's trading session, which is, kind of typical. A lot of shorts probably covered to buy positions back, not knowing what the weekend weather was going to hold. And we opened up Sunday night with a higher trade, but at the floor open, we saw funds take advantage of that higher price action again, and have kind of put us in the red here across the board. 346 to 348 remains very pivotal support. We need to hold that. Obviously, tomorrow's USDA WASDE report could get us down there, but it could also give us the opportunity to break out to the upside. We did fill the gap, 364 to 365 1/4 in the overnight session, but the bulls really want to see it close above 370 1/4 to get some more momentum to the upside. Friday's commitment to traders report showed that funds reduced about 78,000 contracts, which brings it more to a normal size position with about 107 contracts long. So that's what we're looking at for corn going into tomorrow's report.
Now, in the wheat trade, we had Chicago and Minneapolis wheat going higher overnight. Kansas City was about flat, but now it's softer. September Chicago wheat is down 2 1/4 at 432 3/4. On the Kansas City side, we have September down 3 3/4 at 417 1/2. Meanwhile, Minneapolis spring wheat trade is just up 1/4 cent at 501 1/4. What's driving the wheat trade today?
The wheat has been, it's just been beat down continuously over the past, month, 2 months. And, we're kind of seeing that roll over into this morning's price action after seeing a little bit higher early morning trade. We got above 440, but that's going to be a little bit more significant on a closing basis. If we're able to find some momentum and maybe encourage some of these shorts to cover and get a close above 440, I think there's more room to squeeze the shorts and pressure them into covering more. Friday's commitment to traders report showed that funds actually increased their net short position about 17,000. So the funds are net short about 124,000 contracts right now. At some point, I'd imagine we have to find a bottom, and we'll start to see those funds cover those positions. But you never want to try to catch a falling knife, especially in this wheat market. It's just been a tough buy.
Well, very well put, very well put. I wanted to touch, if I could, on the rice market. I've been watching the rough rice futures, and they're under a little bit of pressure today, too. September down 3 cents at 1060 per hundredweight. In the cotton, it's been a different story. We've been higher all morning. We have December up 127, and now it's 67.08 per pound. We'll be back in a moment talking more with OliverSloup about livestock right after this. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling with you. We're talking with OliverSloup of iiTrader. He's at the trading floor in Chicago right now at the CME Group trading floor. And Oliver, thanks for joining us. We want to take a look at our livestock trade right now. And if you look at the cattle market, we'll look at the live cattle futures. This market just seems like it's just standing on the corner with its thumb out and just waiting for somebody to come and pick it up. We have the October live cattle down $1.20 at 111.12 on the day. We have December down 93 at 112.85. So, you know, we had a high in October of 112.10. Now we're at 111.12. So we're about $1 off of our earlier high this morning. What's it going to take to snap this cattle market out of this doldrum that it's in?
Well, I think it's going to take some really solid demand. We've seen demand come and go, recently. One of the key levels that we're looking at for that August contract is 111.07. That was last week's low. If we break below that, I think 109.57 is what we see. So the trend has still been down over the past couple weeks, and that's going to continue to be the trade, I think, for a lot of these guys here on the floor, where you kind of sell the rip and buy the dip to cover. So we're looking at 109.57 to hold as pretty good support. We might see some short covering from there. On the top side, resistance for that live cattle contract, 112.89 is the 20-day moving average. If we get out above there, maybe we'll encourage some more buying activity to step in. But until then, I think this market remains under pressure here to start the week.
So do you think the feeder cattle market is still going to be more closely tied to what's going on in the corn?
Yeah, you would think. We're not seeing that really play out here this morning as the feeder cattle are under pressure. Technically speaking, the feeder cattle are starting to roll over. We failed to get out above the 50-day moving average last week. We tested it about all 4 days. It was a short trading week, so there were only 4 sessions. But I think we tested it all 4 sessions, failed to get out above. And we have not traded or closed above the 50-day moving average since going back to March. So that's technically significant in our mind. We weren't able to break out, so you're seeing the sellers step back in. And the next support level that we're looking at is 141.27. If that gives way, you could see some accelerated selling pressure. But as with the live cattle, it's kind of a downward trade here. So be cautious if you're a buyer. You're going to want to be patient.
Well, speaking of support, what do you consider support on the August lean hog trade? It looks like we're getting really close to some really rock-solid support somewhere.
Well, I thought we hit some rock-solid support last week, but it was like a knife on warm butter, just cutting through some of those levels. 79.16 was the 200-day moving average, and that gave way, and we're trading below that here this morning. 78.10 is really the next level, not that far away. That's the May 24th low. If we break below there, I wouldn't be surprised to see 75 come into play. But you're right. This market has just been beaten and battered. We are in the oversold territory, but the market seemingly shrugging that off. So I would expect a near-term bottom sometime in the near future, but again, as with some of the other markets, it's hard to step in and try to catch a falling knife.
Well put. Oliver, thanks for the comments. I appreciate that very much, and hope you have a good trading session. We'll wait for the big reports to come out tomorrow and hopefully get some clarity in all these markets. So I appreciate it. Thank you, sir.
Thank you.
Have a great day. OliverSloup with iiTrader in Chicago. So there you have it, Mark, the latest. A lot of weakness in all the livestock trades so far today. The grains are hanging in there.
And I like it when the traders give us a number to watch that they're watching,
right,
the 50-day, 100-day average, and we can kind of follow along with them and see kind of what they're watching.
You bet.
Thanks, Marlon.